All right, how we doing? Can you see my screen and hear my voice? You see 3 screens. Yes or no? All right, that's kind of weird. All right, so let's see what we got here. Okay, how's that? All right, cool. All right, so everything's good. You can hear my voice, see my screens, everything's clean. Fantastic. All right, everybody, welcome to the final session of 2022 for Steve. This is Beat the Market Maker. It is December 13th, 2022. Last session before we take a couple weeks off for the holiday. For me, the guys will be around for next week. All right, here you have it. We're in quarter 4-3, 73 days behind us, 12 days to New Year's Eve. For all, what do they say, intents and purposes, the year is essentially over. It's just putting the bow on the presents now, right? All right, we did it. We made it to the last quarter. Flies by. We're sitting right here. Is that right? What the hell's today? I don't know why my thing says the 13th. Today's the 14th, right? I'm not crazy. All right, so that's driving me crazy. Anyway, all right, so December 14th, 2022. Just wrap it up, man. There's nothing you could do now to salvage the year. It's over, right? Okay, so looking forward, what are you going to do? What are you going to do with your time? What are you going to do next year? That's the stuff I want to talk about. I want you to take some time off, screw around a little bit, be with your family. But I want you to start thinking about when you get back in January. It's not too early to start thinking about that. You got to have some kind of plan. I don't know who went out and bought a planner. I don't know who went out and bought something to write on, a notebook, a journal. Man, you don't have to spend a lot of money. You could buy, I think, a school notebook for under $1, a spiral bound notebook with some pages in it. It doesn't have to be a fancy bound journal for $25 if that's out of your budget. It doesn't matter. Just start putting some thoughts down for next year. All right. I'm thinking that I'm probably going to be back around here, around the 11th, right? I'll be off this week for sure. This is the holiday. Get settled, get reset, and then start the 12-week year from here. That'll be week 1. You guys map that out. We'll be together, and we're going to start, I guess, kind of like a new training cycle. See how it plays out. What I want to do is I want to work from zero. You just walked up to the computer, you signed up for my class. Where are you at? What do you need to do? That's what I'm thinking. I don't know if that's going to be boring to some people that have been around for a while, or if everybody could just kind of like remedial use it. So thanks, Shelby. Appreciate it. Looking forward to getting that from you. So anyway, you just gotta have a plan, man. You don't start planning for next year on the 9th. You start planning for next year now. All right, for the next 12 weeks. It's not really next year. It's 12 weeks, man. 12 weeks at a time. 6, 7, 8. What are we at? 9, 10, 11. It's going to be about 11-week cycle because we're ditching this week. So yes, your foundation is everything. How you start determines where you're going to end up, right? If you start halfway through the mountain, it's a lot easier to climb the last 5,000 feet. Okay, so you do not decide your future. You decide your habits every day, and your habits decide how your future is going to play out. If you reflect back on what happened this year, it's most people, it's SSDD, man. In the trading business, in your life, it's just the way it is. You get up, you go to the gym, you don't go to the gym. You eat a banana versus a candy bar, you don't, whatever. It's just a choice, and that becomes your habit. You do that shit every day, it becomes your habit, right? Listen, I'm very habitual, and I was never like that. I was always off the cuff and crazy, and I don't know. You just realize you get up every day, you got to have a cup of coffee and a banana. You try to extend your fast a little bit, go in the office, do what you're supposed to do. It's just life. So if you can just tweak those habits a little bit to get you where you need to be, things will start coming together for you next year. You just have to decide how you function every day, Monday through Friday, Sunday through Thursday, whatever your schedule is going to be. And that's going to determine how you do. All right. Over the break, spend time with your family, man. You know, a lot of growth comes when you're not in the gym, right? When you're resting your muscles, when you're not actually working out. The same thing's true about trading. I've had a lot of realizations in this business over the years not being in front of the screens, like thinking about what happened. You know how stuff plays in your head after you're done? You're like, oh, I should have did this or should have did that, or I realized that now. That's everything. So unless you're brand new, if you just signed up this week, of course you got to get on the screens. But if you've been here a while, give yourself some time off, man. Take some time over the break, spend time with your family, reconnect with your significant other, and just figure out where you're at. The thing is you need to feel rested and refreshed and come back ready to roll up your sleeves on the 1st or whenever we start the next week. But you have a week in there screwing around, getting yourself back into work mode, right? Same as me, to start writing some stuff down, marking up some things, and figuring out what you want to do. All right, take time to, when I say read some books, listen to some audiobooks, man. If you're not working out, most people start an exercise program, diet program after the holidays because they eat too much and they go, this is it, this is the year. Quit mumbling that shit under your breath and make something happen. 12-week year field guide, mark that up, send it to me, or just the regular book. And I love this guy, Jim Rohn's pretty good. He's got this collection on Audible. You know, I like ebooks. Don't have time to actually physically read the pages. All right, so listen, this is what I'm thinking for next year. We'll come back. We're going to start with, I just signed up. What do I do? We're going to set up a way to find your entry, your limits, your stops. Talk about a couple of setups that you might want to make your own. And that's pretty much the business. And then it's just adding lots and getting qualified. So, hey, I wanted to address, I guess I'm thinking about it now. There was an issue with the spreads yesterday at FTMO and pretty much globally. There's nothing you can do about that shit, man. It's just part of life. It's happened. It happens every once in a while, right? They clear the board. They open the spread, right? The spread's the difference between the bid and the ask. And if you're sell side in the book and the buy side goes and the sell side doesn't come along that way, right? There was nobody buying in the book, so nobody was taking your order. You don't get your limit. You don't get out. Got to be there to manually click it, whatever the reason. But it's a shitty part of the business, and there's no way they're going to own up to it or say that it was done. They pulled the liquidity out of the book. Nobody was home. You didn't get filled. So they're never going to own up to it because that means they'd have to refund thousands of people on that particular stop level. Listen, it's part of the business. You can't let it define you. It's one moment in time out of all the trades you've taken. You just got to get through it. All right, let's take some quizzes. This is kind of like your final exam for the year. All right, pop quiz, get out a piece of paper, pencil, write this shit down. I'll go through it. These are some things we've been talking about for the last quarter and stuff that we marked up. You should know the answers to this stuff. If you don't, I would say see me after class, right? That's what I have to tell you. Come see me after class, but you need to send me an email if you're lost. And if you're brand new, you're supposed to be lost. That's the whole point. All right. What is the POC or point of control? 30 seconds. Write it down, post it in the chat, whatever the hell you want to do. Go. Okay. Some of you got it. It's the price level that has the highest volume. The widest horizontal row is referred to as the point of control, POC, which identifies price level where most trades took place. Where I come from, we call that accumulation or consolidation, man. That's all it is, right? We lean on that for pretty much everything we do in this business. Okay? There are multiple points of control during the course of the day, and you have to understand that's where we look to engage. A lot of you don't realize that. I've talked about not chasing impulse legs. You engage in the flat prints, POCs, consolidations, right? Consolidation makes up the areas on the chart that we are most concerned about in this group, right? There's 3 consolidations in the course of a day, really 4, high, low, and mid-level, right? The high swing, usually a flat print, the low swing, flat print. Coming out of Asia, the open, flat print, end of the day, flat print, right? Flat prints, opening range, AR. I've based my entire career on leaning on these levels. You don't chase impulse, you engage in flat prints or points of control. All right, here we go. Asian range, flat print, we box that in. 3 pushes into the high, pull back, flat print, push down, mid-level consolidation, push down, consolidation, push down. I'm out of paper, end the day, back into the range, right? Our concerns are here, 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 and you should be out by the time it flat prints over there. Points of control are the highest volumes exchanged in these levels. Why? Because the dealers make a run, they shoot up, they flat print or consolidate, and they clean up all this mess that was made from retail traders and settle in here. This is like a form of settlement. Inducement, traps, chop, balance the books, pull away from the area, balance the books, push down, pull back, hit the stops on both sides, make a directional move or make a move back towards the high. You know the drill. But points of control are the highest volume exchange on the charts. Why? Because the dealers are collecting the points, the money. All right, next. What is VWAP? What does it stand for? Why do we care? 10, 15 seconds, write it up there. Only one guy took a stab at that? Come on, man. Thank you, Lee. It is volume weighted average price, correct. Volume weighted, meaning what? It's the average of the order flow coming in, right? It's basically a moving average of volume that forms price. It's a precursor to the print. That's what you have to understand, right? If you have a line on a chart that is being formed not on the actual candlestick prints, but on the order flow that is coming in, right? You understand how it works. You have a candle is the last thing that you see on the chart. Price order flow comes in, bid and offer comes in, splits the candle down the middle, right? Remember the cells? And the cells are a couple of pips in between. That's the spread, and it's different for every pair. That line is printed on the precursor to the candle forming, which basically gives you a moving average of volume. Okay? Why do we care? Well, we use something in the group. What do we use that tracks it pretty close? Yep, Mohammed's got it. JR, yep. The water. We use the 50 EMA on the 15-minute chart or the water line. The water line is pretty damn close to VWAP. I've been using the 50 for 24 years now. I mean, when that was given to me, I didn't know that was the reason, and I don't know if the person that gave it to me even knew the reason. All right, you ready? This one might be a little trickier. What are the 3 taper patterns in a candle based on volume? How do they print based on volume? Okay, I'll give you a minute. Go. All right, I got crickets going on. I lost you guys on this. You remember or you don't remember, right? Rejection high, rejection low, then a straight body candle, right? So think about it, right? Taper, the volume tapers in the candles, right? So heavy volume thins out, remember? Heavy volume thins out. Most of the time, the POCs are going to be on the high swing or on the tail, right? The same thing inverted. Then a straight body, right? You have tiny wicks on top and bottom, and you have the taper like this, right? Heavy volume in the center starts thinning out. Okay, why do we care? Usually these candles like this, actually all 3 of them, right? Inverted, they're used to break a level, right? So if you have an M formation going, you're going to get one of these taper candles like this, high swing, and you're going to get the volume weighted towards the bottom, right? So thin towards the tail or the wick, heavy here. They're going to go up, trigger the stops, right? Picture the lines in the book. Picture the lines in the book. These lines have to press this. So the heavy volume is going to be here. They're going to go up, trigger the stops, which are thinner, and they're going to come down and print heavy to pull back against this order flow here, right? So if there's 1,000 orders here in this accumulation, they're going to spike 2,000 orders. Are 2,000 orders going to get filled? No, but the 2,000 orders will pull this wick right back, absorb this, and close below. And you don't realize you're looking at a taper candle when you see this because you don't see the prints. But a hammer, inverted and regular, is a trap move. And if you don't understand that, you can pull the trigger right after the hammer prints on a structure. That's the point. Okay, straight body, right? If they're in the middle of a run, you might get a mild pullback, and the POC could be top, bottom, or middle on this. This one's a little tougher. But if you think about this for a minute, you get this print, right? You got to overcome this area. You get this straight body candle, and the volume is going to be usually on the apex nadir thing. You're going to get the point of control in that candle to break the apex nadir and then close normal above, then pull back and take off. So these candles, these long candles with little wicks on top and bottom, most of the time, right, they taper like this. My drawing's horrible, sorry, just hang with me. All right, and the POC is going to be about middle, but if you look to the left, you're going to see where the bump was. Apex, nadir, some kind of rejection area where a turn bar, that turn bar is going to give you a rough idea where the point of control is, so you can enter after that breaks and pulls back. And if you take this and extend it out, it's going to go right through the points of control just from eyeballing it. Right? I told you to draw them, but I already drew them. Rejection high, rejection low, straight body. Right? And understand the POCs, right? Hammer, the points of control are going to be at the tail or at the head. How would you know the difference? How it closes. So if you have an M structure and the price goes up, but this closes usually back in the range, the point of control is going to be here. If this closes outside the range, if it's a bigger wick and it closes below this structure, the point of control is going to be here. It's going to be contained inside the head of the candle or the hammer part. You don't need to use volume. You just need to understand what you're looking at. You don't need to look at the print on the bottom. It's bullshit. It doesn't mean anything. You ain't going to read it. You ain't going to see, oh, there's a spike in volume. It's all the time, man. Volume's constantly changing. You have to understand what you're looking at in the context of the entire structure. This one little piece of the puzzle is the go signal, but it's part of a much bigger structure, right? If you don't have this this, and this, then this doesn't mean shit. You don't need to use the volume prints on the bottom. You need to understand that that's a high volume weighted candle that usually has the point of control below these areas. Okay, you understand? Let me look at some comments real quick. Okay, someone said they counted the red pendings, and every 4 pips there is 1 red pending volume in the book. Okay, if that works for you, then absolutely that's what you need to use. But I want you to understand the small picture and the big picture and how it all ties together. You need a trigger, right? We talk about setups, and a lot of people tell me they don't know when to get in. Well, I'm giving you when to get in. You have to have a close and a putback, and you have to refine the entry. That's all part of the stuff we're going to develop next year. When I say next year, it's like 3 weeks away, 2.5 weeks away. It's little pieces and little nuances of a puzzle that you have to make fit. And the problem is it has to fit everyone's personality or your own personality for your style. You got to find your spot. And that's the hardest part in the business, is finding what works for you based on your personality. You guys remember a few years ago we did the personality test? We're probably going to do that again this year, coming up in 23, to find out where you fit in this, I guess, in this business, in this world. You have to find your spot, and then you have to cultivate or nurture that feeling, right? Some of you hate getting up for London, okay, or it's impossible. Okay, well, that's not going to work for you then. You got to find your spot during Asia, swing trading, or in the morning session. You got to find something that works for you. That's the only way this business is going to fit and work in your life, man. There's probably more opportunity right now than there's ever been. There all kinds of different markets are available, futures markets, all kinds of feeds, volume feeds, all kinds of things that weren't available when I started. When I started, man, the platform was hideous. It's a joke now. There's a million different opportunities, and not to mention I had to beg, borrow, and steal to get funded. You just got to pass a qualifying test that if you can't pass, quite frankly, you got no business trading real money anyway. I mean, that's as harsh as I could be today without hurting anyone's feelings. If you can't pass their qualifying thing 5 days, whatever the hell it is, and maintain a certain amount of drawdown, you got no business trading real money. You got no business paying to trade their money. You have to demonstrate that plain and simple in demo to yourself. Then you try their challenge, and then you get qualified. That's the steps. We're going to work through it. We're going to work through all this stuff together. The next 12 weeks when we start back is going to be nothing but that. Basically, a smaller class of building out something that works for you for next year. All right. I've been thinking about this for the last couple of months. I've mentioned it a couple times. We're going to start with everything, basics, and try to build some type of systematic approach for each person. And if you don't participate, shame on you. If you don't send me something, I can't help you then. All right. I was going to draw them for you. I already did. All right. When you see a wick in the candle, what's going on in the background? Simple question, but you need to understand it. Throw some words out there. All right, kind of simple. The market makers or dealers are holding or defending a level, right? Yes, stop hunt, absolutely. That's acceptable. So what happens, right? I always sell. Don't ask me why it's my favorite. Right? What's happening in the background? You have, if you think about the book, the order book, right? Every cell has to be striped or blocked to get this thing to push down. Right? So the dealers have orange in the book, heavy pressure. In this instance, heavy selling pressure to squeeze price back down. Right? Imagine what happened. At one point in time, this candle printed like this, right? That was the print, and then it pushed all the way back down to close like this. In order for this to turn into this, there had to be order flow in the book coming in and pressing against price, right? It's 5 ticks here, but it could be 20 ticks, whatever. Depends on the size of the candle, the time frame, all those things. Candle over prints, right? And then you're going to have 1 or 2 little ticks of bleed for the spread. And I guess yesterday was 30 ticks of bleed. All right. In order for what happened yesterday to happen, they have to pull this stuff out of the book and then they put it in here. So you have a big hole in the book, basically, of black, nothingness, and then the next price is filled 30 pips away. Okay, you understand how these are printed? It's simple, but it's not. All right, explain this in a few sentences. I kind of just did, but tell me what you got going on here. You don't actually have to write anything. I just want you to think about what's going on. There's only a handful of people. The same ones write every week. The other ones hang back and don't talk to me. I'm not going to call you out, man, if you answer in the chats. I promise. Okay, this is pretty much what I just talked about. What's going on here, right? You have heavy color in the book. They're putting the squeeze on price. All right, see, you got some bleed right there. They put a dark stripe in. Look, nothing. A dark stripe comes in and then it turns white. This is called capping. They cap the price in a very short, small area, right? This area, this is all the liquidity is here. This was thrown in the book after it bled and they capped it. Okay. What is support and resistance? Explain it. What's support and resistance? You know, I hate that terminology because it's bullshit, but what is it? Using a different perspective, right? Who creates it and why do they create it? Okay. Support and resistance is the accumulation of orders on a price point or on the book. It's man-made by these guys. It's not real. Can be violated or broken at will. If they make it, they can pull it. Support and resistance, where I come from, is a myth. The levels are only created to trap and accumulate money by the banks and the institutions. Who put this shit in the book? I didn't put it there. Who put that? I didn't put that shit there. Who did that? Banks and institutions? Okay, so they're making support and resistance. So when you walk up to a chart and go, oh, that's support, that's resistance, man, there ain't nothing there. It's an illusion. Just as quick as that stuff went in there, it could turn black just like that. As soon as they pull the liquidity out. So support and resistance is man-made. But since we know what's going on and we understand how it works, it gives us an edge. Okay, explain this to me. This was a chart from a couple sessions ago. Explain it to me. Yep, good answers. Hook back. Okay, so hopefully you were thinking this. right? The high and low swings are boxed off based on the order flow in the book. We use the turn bars, right? I've talked about this. We use the turn bars in the consolidation zone to gather intel on what the next possible moves could be, might be. How do we make entry? We make entry on an AFP or a complete crossover, right? AFP is anchor side, major trend, or high-low. We're going to base it off of that, lean on that. We're going to use the flip. Dealer takes the level and the pullback. Refine the entry off the hook. Okay? So we know that the book looks like this. We know that this is the same thing as this. But what we do here is we use these turn bars to get an aggregate of where the order flow is, right? This order flow predicts future order flow. This order flow predicts future flips or order flow. I don't know if this is going to flip to the downside, but I have a pretty good idea on what happened in the past 3 days, right? Why? 3 days of rise brings to fall. 3 days of drop, market's got to pop. You use clues or background information and turn bars to get the idea. So instead of having this, all this noise, the only interest or the areas of interest that I care about are where the turn bars are. I don't care about all this liquidity in the middle and all these stripes. It's actually mind-boggling to look at it. I only care about where the dealer used liquidity or order flow to turn. So if I come back here and I just draw in my turn bars, I'm basically boxing in the book. I'm boxing in price. Now, what are the possibilities here? Okay, you come to your chart, agent range or high level or mid-level consolidation, right? This is all the stuff we just been talking about comes together. What are the possibilities? Break higher, break lower, stay in the range till next session. That's the 3 possibilities. Okay, or he can hit the stops high, bleed out of the book, come all the way across and then retest, or vice versa. That's it. Those are the possibilities. So if I walk up to the terminal and see this and I go, okay, price has been going up for the last 2.5 days. He's got high level consolidation after a big rise. Starting to come together. I have an anchor from Monday. This is Thursday. Okay, Monday, Thursday, Wednesday, Thursday, midweek reversal. I'm looking for some kind of trap move to the downside. I get rid of all that orange shit on there and I draw these levels based on the candle formations or the turn bars. The turn bars are all I care about at this point in time. I box them in, I aggregate, I take that little wick over there, I take this bar, the top of that, this high swing, the top of that, and I stretch it out into time. I come over here, I could have actually technically took this, take this turn bar and this turn bar rejection. I aggregate some of these bodies on the swings. I grab the top of that body, this body over here, and I stretch it out into the future. Now I just wait. Okay, I didn't get any action until 8 o'clock in the morning. This started accumulation overnight. This projected itself out into the US session, and I had him as soon as he hooked down and turned back into my zone. That's a trade. That's a trade. Go to bed already. Done before session changeover, 9 o'clock. That's it. That's the entire business. Turn bars based on volume, based on order flow, based on the book. Man-made, support and resistance, doesn't matter. Because I hear people say, oh, that's a strong support. Who said it's a strong support? As quick as that orange goes in the book, it turns black just as quick. Blink of an eye, it goes in, it comes out. All right, so if you were thinking along those lines, right, the high and low swing are boxed off, just as they're boxed off in the order book. We use the turn bars in the consolidation zone to gather intel on what the next possible moves are. How do we make an entry? We use AFP, or we use a complete crossover of the zone. Right? I just told you earlier, you have Asian consolidation, high-level consolidation, low-level consolidation. This is the entire business, and somewhere in here, they'll end the day back in consolidation. But we care about these three. This is the end of the day. And this actually rolls into the next session, Asia, and starts over again. That's it. Why do we care about this? We don't. It's points of control. It's where they accumulate and consolidate. That's the entire business, man. You can go back and you can find this every single day, twice on Sunday, right? And we extend the AR lines because we know there's going to be some retest or some type of rejection off of the initial Asian range, especially going into London on the first swing out. All right, makes sense. A couple more minutes. Let's look at some charts. Okay, let's see. I'm just going to tell you there's the answer. What is this? This is a VWAP 50 bounce right there. This is a 50-50 bounce trade. It hits the 50 EMA and it's good for about 50 pips. That's where that came from. That's why it's called a 50 bounce, because it hits the 50 and goes for 50, especially in pound crosses. You have your anchor low. Where does the book flip? The book flips, right? This is the zone. The book flips on a close above this area on the chart. We take this liquidity in the orange and we stretch it out into time. We also have the EMA right there. Price breaks above, pulls back, kind of in 3. There's your micro W. It pins right to the VWAP, hits it again, and then you can break down here and get a tiny flip. You can get in right there. So you have a big picture, pullback, microstructure, bounce off the VWAP, 50 EMA, flips the book here on a micro level, retest into the apex nadirey thing, and takes off. That's it. That's the setup. If this is the only setup you ever mastered, our jets will pass each other in the sky. That's it. If this is the only thing you ever did, you'll be a master in the business. That's it. Forget about the shit with the spreads and the bullshit the dealers do. There's enough of these every single day that you can get what you need out of this business. You understand? It's all you need. Decide right now if this is going to be your trade for next year in 3 weeks, and we're going to map this out 1,000 times together. I've mapped it out for you 100. You need more reps. You need to go to the gym and do more reps. Make sense? It's an easy setup. And the more you practice it, the more you see it, the easier it's going to become. And that's all you need in this business. One setup. One setup, one pair. That's it. 1 for 1, man. All right. Mark this up for me. Go through it. Probably the last chart. I'm going to wrap it up early tonight. I know everybody's busy, man. Christmas is what? Not even 10 days away, 8, 9 days away. I know everyone's busy, got your hands full. You don't have time for me to be blabbing for an hour. Same over here, man. We got presents to be wrapped, stuff going on. Kids are getting out of school this week. We got Christmas parties at their school, just stuff going on, man. So I understand exactly what everyone's going through because I'm going through it too. It's life. So put this out of your mind for the next week or so. Spend some time with your family. And then after Christmas, 27, 28, start refocusing what you want to do. Figure it out. Let me look at the comments. Yeah, Brandon, good stuff, man. The biggest thing is just recognizing what's painting in front of you. And the only way to do that is to watch it paint. Man, listen, you guys have tools that are available, may or may not be using. Market replay. You could speed up between the dead times, and you could get more done in less time. That stuff wasn't around when I started, man. It was all manual hand marking stuff. There's all kinds of tools now. There's tools to see how a systematic approach pays out, how to make adjustments, what your draw was. I talked about Steve Wilson stuff a couple weeks ago and the software he's using. There's a lot of things out now. The business has gotten crazy good. There's a lot of things out that weren't available before. Take advantage of those tools. Don't be old school. Listen, I've been around a long time, man. I've been doing this 23 going on 24 years. I don't even know what half the shit out there is now. I'm set in my ways. I've been doing it for a long time. I'm comfortable with what I got, but I'm open to new ideas and new stuff. And you have to do the same. You have to be open-minded. Unless you got something that's working for you, if you're comfortable and you're making money and it's working, don't make any adjustments. Just maybe refine what you're doing. Don't make any big changes, major changes. All right, come on, walk me through. What do you got? Anybody? What do we got here? This is a good markup submitted a while ago. It's actually, it's been in my my stuff to look at. It's from January, so if I hold it for another month, it'll look like it's new. Anyway, look, SSTD, man. Right, look, blue tracer, blueberry, moving averages pointing down, breaks below, pulls back. There's a micro M, but I don't like it till it gets below yesterday's low and stays below. This is the perfect entry right here for sell side. There's your deep V pattern, finger roll. Refine the entry off of this, right up against the tracer. You go limit in the box, nice push into the lows. You're out. Now we got to find another place to get involved. Okay, well, we know this was the level below the low, right? So we want this long, we got to get it back above the same level. So we extend this level out, we get that deep V, flip above, they take it, book caps it, pulls back, 1, 2. You get a little slight bleed on this level, 1, 2 right there, limit order, there's your trade. Projection for the next day, possibly pull back, yes. You're going to get a push, consolidation, hit the stops low, we expect higher price. If you're not walking through that smoothly or if you're having problems, send me an email. Everybody see that? Crystal clear? What's the Aries interest? We got this right in our face. We got this projecting over tomorrow. High side target. If you're not looking at these landmarks on the chart, what the hell are you doing? AR extensions, right? Right up to AR mid, pulls back. It's basically, right, if you take this right here, this is a W, but they broke it and they flipped the book. So if volume was in here flipping the book, we expected to come back here and do something. It pulls up short, makes the pullback, which gives you an entry. This flips higher, pulls back to where it was before. See that? That's an easy laydown, man. That's a free trade. But you got to be able to identify it in real time when it's developing. What gave it away? This big impulse move, right? This is one of those candles that could end wicked off the bottom, POC high, to take out all this stuff. If it's a 15-minute candle, it's probably bigger. If it's a shorter 5-minute candle, could end on a hammer. POC would have to be high side. Why? In your mind, imagine where the POC is. If this was one big candle like this, where's the POC? High side, because they have to absorb all this work from earlier. So all the sell side people that are trapped now, expecting it to go for 1,000 pips and don't realize take 25 or 30 until you start getting good at holding and get your counts right. So what happens? People get in here or they get in here and then they wait, oh no, it's going against me. And then they see this print, think it's coming back, but they hold the level. You understand? It's just little nuances that you have to learn to identify in the business. That's the only way you're going to start to see success, is recognizing this stuff as it's developing. It takes time, takes practice. Notice how they kind of consolidated here and then they consolidated above that. Right? You get in on the edge of the flat print. You get in on the edge of the flat print. Right? You don't chase this impulse because you're going to end up down here stuck, or you're going to chase this in the wrong part of the trade. You're looking for this. You're looking for this. You're looking for this. You didn't get a lot of consolidation low and high side on this. You had Asian range, consolidation, flat print. You're looking for an area of interest. You get your break. You get a smaller structure that is an M below the blueberry, below the ketchup, and below the blue tracer. That's telling. What do you got? You're probably going to get a measured move, right? Symmetry, all this stuff, a measured move from here to here. 1, 2. Reversal. 1, 2. Measured move. See how all that shit comes together? That's pretty interesting. It's all in there, man. You just have to see it. That's it. It's all in there. And one trade's not going to define you. The dealer screwed the spreads up. Screw them. Just get on with it. You know how you get it? You get your money back. Next 2 or 3 trades, you get it back. They're not going to stop doing what they do. You just got to figure out how to work in the confines of what they're doing and carve it out for yourself. That's the business. You think that's the first time they ever spiked, opened the spread, and they do it every friggin' day. You have to manage your emotions and yourself in the confines of what's available to you. You have more shit available to you now than was ever available to me when I started out. That doesn't make you feel any better. I'm sorry. But all the markets are available, different platforms, different dealers. You just have to figure out something that works for you and get your head around. All right, I went past. I wanted to end it at 45. It's almost 50. So let me get to the end of this. There we at. There we go. Listen, just for a minute, I want to be a little emo on you guys. I love you guys. I love coaching you guys. It's been an amazing ride this year. I want to thank every single one of you for a wonderful year, being part of the business, part of the family. This has added a new dimension and new meaning to my life. And I don't talk about this stuff all the time, but it's been fantastic. I never thought when I started teaching this 12, 13 years ago that I'd be around this long. I thought I was going to do it for a couple of years and people would get over me and get on with my day. But it's given me a purpose. It's made me feel really good as a person inside to share this knowledge. And I wish the best for each and every one of you in 2023. And if I could shake your hand, each and every one of you right now, I'd look in the eye and shake your hand and give you a hug. So next year, anybody that's struggling, we're going to figure it out. Thank you guys. Thank you, Muhammad, Brandon, Kevin. Appreciate you guys. Jason, appreciate it. All right. I'll see you next year, which is really like 2 weeks. All right. I'll see you back here second week of January on my Wednesday. You'll get the email notifications. Take some time with your family. Get your head on right, and let's start the year off together. Thank you, Shelby, Frank. Appreciate you guys. JR, appreciate you. Good night.